Okay, I think we've reviewed, how to enter on a bullish scenario, how to enter on a bearish scenario. One video I quickly just wanted to make. This is going to be a very small video, but it's something that's worth mentioning. Okay, because our strategy, the one that we're going to be using, you're going to be waiting for those entries at those key areas, right? You're going to have these key areas drawn out. This is the 1 hour, but it'd be drawn on your 15-minute. And you're looking for candles to break. There is a certain candlestick pattern that I really want to show you guys, and I call this the money candle. And the reason I call it the money candle is because typically this candle will stop people out. Okay, so it'll take a lot of money from the market, but if you can get in with this candle, you can make a lot of money with this candle. Okay, it's a little bit of a manipulation candle, you could say, but it happens in our point of interest areas. I don't see too many examples just recently of it happening, but it's happened to me a lot in the past. And this can make you a lot of money, especially on the lower time frames. If you find this candle on the 5-minute, it happens a lot on the 5-minute, less on the higher time frames. But how this works is, let's say, this is your area of interest. Okay, on the lower time frames, it's fine, this entry. But sometimes you can use it in confluence to get your second entry. Let's say you already got your first entry on the 15-minute here. But if this happens and you're seeing this on the hourly or any other time frame, just know it's a great opportunity. It's a candle that, or let's say we're looking to enter here. It will break the top of the candle, taking people out, maybe even stopping you out. And then it will push down or the other way if you're in a bullish scenario, and it's going to break the low of the previous candle. So it's going to break the high first, take people out. Okay, that's how you got to think about it. It's taking somebody out, and then it's moving in the direction that it's supposed to. So it's kind of like a little bit of a manipulation. So, we're going to talk about trying to get more than one entry. Typically, I would suggest you get 2 entries with this strategy. One on the first break of the 15-minute candle, and then you can wait for another candle to break, and this way you have 2 entries. You can hold one for like a 1 to 3. You can try to hold one for like a 1 to 5. Let's say your first entry was like here, right? Let's say your first entry was somewhere down here when the candles broke on the 15-minute time frame. Okay, and you were targeting a 1 to 3. You got it. When this candle here broke the top and then the bottom low, you could easily just enter and put the stop loss above that candle for your second entry. Okay. And worst case, you take a 1 to 2. Risking 1% on this, if you risk 0.5% on this one, that's about 4% in one trade, maybe even more, 5%, if you can squeeze a bit more out of it. So it's worth noting. Okay, it's worth noting. I'm going to show you another example on NAS 100. I actually took this trade the other day. I didn't take it all the way up there, but I did take this trade. Key area of interest for us. We were already in an uptrend on the higher time frames. We paused for this bearish candle to break all the structure to the left. Came back, did the first bounce. I don't think I was up at this time at 5 in the morning to get in on this. So as you can see, a lot of people are getting in over here. So this candle, clearly we know this candle stopped a lot of people out that had stop losses sitting right below the double bottom, or maybe just here. Maybe this was their entry, so they've gone break even at this point, right? People who entered on the break of these candles, they've gone break even. It comes back, those people enter again, and then they go break even and it takes you out. It breaks the low of all of these candles, and then it'll explode to the upside right there. Okay, with one of these trades, wait for the break, and literally you could just tighten it up that real tight and just go for like to the highs, the previous highs or something, right? Boom, you can smash that out. So wanted to quickly share that with you guys, in case you do see it in some of your setups where you're like, what the hell, you know what I mean? Because a lot of times we're putting our stop losses above wicks. Sometimes it'll take that wick out and then completely destroy the candle and break the low of that candle as well. That's an indication that you're on the right path. Get in on that trade. If you got stopped out, go in with a little bit smaller risk, but get back in, because it's probably going to be a strong push. You're going to be able to get like a 1 to 4, 1 to 5, even with a 0.5% risk. So I thought I mentioned that candle. It does come up, and it's something worth noting. So with that, we'll move on to the next video.